All right, let's get right into it. Bitcoin's been on an absolute tear, and everyone is asking the same question. What is next? In this explainer, we are going to decode the momentum, break down what's really driving the price, and look at some potential future targets.
So check this out. As we're talking, the price is sitting at over $113,000. That's a huge number. But the real question isn't just the number itself, it's what's really behind it. Is this rally built on a solid foundation, and where could it possibly go from here?
Okay, so to really get what's going on, we have to pop the hood and look at the engines that are driving this whole thing. And trust me, this isn't just some random hype-fueled rally. There are two very clear, very powerful forces at work here.
And here they are. You've got strong positioning in the derivatives market on one side, and on the other, just this steady, sustained demand from the big institutional players. Let's break down what each of those actually means, starting with the wild world of derivatives. First up, we've got to talk about something called open interest, or OI. The easiest way to think about it, it's basically the total value of all the active bets, futures contracts, on where Bitcoin's price is headed. It tells us exactly how much money is in the game right now.
And wow, the amount of money in the game is just staggering. We're talking over $71 billion in open interest. Now, that's not just a big number for the sake of it. It tells us there is a ton of participation, and this is key, a lot of leverage in the system. And leverage, as you know, can supercharge moves in either direction.
Okay, the next piece of this derivatives puzzle is something called funding rates. You can pretty much think of these as a sentiment meter. They're basically little payments traders make to each other, and they show us which side of the trade is more crowded. Are more people betting the price goes up, or are they betting it goes down? And right now, those funding rates are positive. What that means is the longs, the folks betting the price will keep climbing, are totally in the driver's seat. They're so confident they're actually paying the shorts. Now that's usually a really bullish sign, but you gotta be careful. It's also a warning sign that if things get a little too hot, we could be set up for a pretty sharp correction.
All right, let's switch gears to that second big driver, institutional demand. Yeah, we're talking about the big money now. What are the signs? Well, we're seeing these consistent, steady net inflows into Bitcoin ETFs. They might not be massive every single day, but they're steady. That's the big players buying in. And on top of that, you've got really high activity over on the CME, which is where the pros trade futures. It all confirms that the sophisticated, deep-pocketed investors are very, very active here.
So you've got this powerful combo, right? Strong derivatives and big institutional interest fueling the market. So what does that actually mean for the price? Well, it all boils down to a battle. A battle being fought over a few absolutely critical price zones that, believe me, every single trader has their eyes on right now.
And here it is, the battleground itself. On the one side, you have the floor, the support level. Think of that as the line in the sand, right around that $111,000 to $112,000 mark. As long as we stay above that, the bulls are feeling good. But then you have the ceiling, the resistance, looming right around 115K. If we can punch through that decisively, that could be the signal for the next huge leg up.
Okay, so how do we put all these pieces together? We've got the market drivers, we've got the key price levels. When you combine them, you can start to map out what might happen next. And it really boils down to three potential scenarios. So let's walk through the possibilities here. First, you've got the base case. If that support floor we just talked about holds strong, the momentum could carry us up into that $120,000 to $125,000 range. Pretty solid. Then there's the bull case, and this is where things get really exciting. If we get a powerful breakout over that resistance ceiling and the big institutions keep piling in, we could be looking at 130K or even higher. But, and this is important, you always have to look at the other side, the risk case. If we break below that support floor, that huge leverage we saw earlier could trigger a wave of liquidations, potentially knocking the price all the way back down to that 100 to 105K zone. So if you take one thing away from all this, let it be this. Bitcoin's price action right now is anything but random. It's all being powered by this clear mix of institutional cash, super bullish derivatives markets, and just plain strong technicals.
These are the things you absolutely have to keep an eye on.
And really, this all points to the new reality we're living in. The big institutions are here, and they've completely changed the landscape. So that leaves us with the big question, right? Is this the new normal for Bitcoin? A more structured market driven by big money? Or is all this new structure just setting the stage for a major price shakeup, one that's just around the corner? Something to think about. Thanks for tuning in.